Much has been written about support and resistance, and I wanted to approach it from a different angle, namely price action in relation to support and resistance. This is a chart of crude oil, and it's a Renko chart, and as you can see, there are no wicks and tails on these bars. These are pure price bars, and wicks and tails are just noise, and you want to eliminate as much noise as possible from the data you're trading, because noise is the enemy of traders. And another factor that increases noise is time. So you trade based on price, not on time. So these are pure price bars here, no relation to time. So you eliminate time from the equation, which eliminates a lot of noise from the bars. Now, this blue line, zigzag line here, is exactly that. It's the zigzag indicator, which has been around forever. And always in hindsight it looks perfect, because it replots or repaints, whatever you call it, to perfectly match the equity that it's plotted on. So the zigzag is not something you can trade for this reason, but for our purposes, and using support and resistance based on price action, the zigzag is just fine for our. You can see right here, each one of these turning points here is lower than the previous turning point. Down here, here, and here. And also these turning points right here, these are lows, and it's lower lows and lower highs. So these are all turning points or pivot points or whatever you want to call them, but they're put in after the fact, because you don't know when the equity's turned until after it's turned. So a series of lower highs and lower lows is by definition obviously a downtrend. In reverse, a series of higher highs and higher lows is an uptrend. And so the trend is reversed right in here, where you have a lower low and then another lower high and then a higher low right here, and then this higher low then is the beginning of an uptrend, where you get higher highs here and higher lows here. Now what I've done here is I've removed the zigzag line from the chart, and I've had the software put in magenta dots on the upper turning points and green dots on the lower turning points where the zigzag was. Puts less clutter on the chart, and also you don't want to have all those little ellipses all over the chart, so this makes a much cleaner chart. Now what you have to remember is these dots are put in after the fact, and because you don't know that it's a turning point until after it turns. So after two bars are formed beyond this turning point, this green dot will be placed. After two bars are completed at this turning point, this dot will be placed in here. But when you're using price action trend lines, it doesn't matter that the dots are coming in after the fact. Now what we do is we put in a trend line between the last two dots, right here and here. And so when this trend line is crossed, and this green price action trend line is crossed here, then that results in a significant up move to right in here, because this dot here came in after there were two bars to the downside. So when this bar formed, this dot was placed. So you can then put in this trend line, because this dot is in here long before this bar is produced. So we put in this green trend line here. Now if you want to put in a trend line all the way from the beginning here, you can see that it is pretty close to this same trend line right here. And because you can see it hits here, and it hits here, and it hits here, and goes above this trend line here. But the end result is these trend lines are pretty close to the same place. So it shows that there is resistance along this line here. So ordinarily, as you know, support and resistance is represented by horizontal trend lines, or horizontal support and resistance lines across the chart. And to me, these dynamic resistance and support lines make a lot more sense. And because obviously this is resistance, and it doesn't follow a straight line across the chart. It moves diagonally across the chart. Now if we put a trend line here between these higher lows, then like this, then this becomes a significant down move right here when this this trend line is crossed. And so as long as you remember the caveat that every time a trend line is crossed, it doesn't mean it's going to be a profitable move, and every profitable move isn't necessarily preceded by a trend line. But in this demonstration here, you can see how helpful price action trend lines are when you use them. They're simple to use, and there is an automatic trend line indicator that will put these in for you automatically in through here, so you don't have to think about them all the time. And so this should be a helpful adjunct to your trading, as long as you realize you have to use other indicators in addition to the price action trend lines.